XLM just broke an 8-month downtrend. Here's what comes next. The breakout that no one expected. XLM just broke an 8-month downtrend. And if you're only watching headlines, you probably missed it. For nearly a year, Stellar looked like dead weight on the charts. From its August 2024 peak, XLM was locked in a descending channel that punished every bounce attempt. Each rally got sold into. Volume was drying up. Social sentiment flatlined. Most traders had either moved on to hotter narratives like Solana's meme season or simply written Stellar off as irrelevant. But in classic crypto fashion, the moment everyone stopped paying attention, it moved. What just happened on the chart is not subtle. XLM didn't just wick above resistance. Closed above it. Cleanly. Decisively. And the price action wasn't isolated. It was accompanied by real indicators of momentum shift. First, the downtrend line that had acted as resistance since last summer has now been broken and backtested. That line wasn't just psychological. It had been touched and rejected multiple times since Q3 2024. For it to finally be overcome, and with rising daily volume, signals the potential end of the bear structure. But that's just the surface. When you zoom out on the daily chart, what you'll see is an inverse head and shoulders pattern that's been forming since the beginning of the year. It's not some loose interpretation either, it's textbook. A clean left shoulder in late January during a relief rally. A deeper head in mid-March when broader altcoins dumped. Then a right shoulder rounding out through April, followed by the neckline breakout in May. Inverse head and shoulders patterns are among the most reliable bullish reversal patterns in technical analysis. And XLM's version has the volume and structure to match. The neckline, roughly around the $0.117 to $0.119 range, had previously acted as a resistance ceiling. This recent move smashed through it, and critically, price held above that level even after the initial spike. That's important. Most fakeouts get slammed back under resistance. This one didn't. So what's next? Well, traders who understand measured moves know what this implies. The distance from the bottom of the head, around $0.085, to the neckline, $0.119, gives you about a $0.034 range. Add that to the breakout zone, and you get a conservative target around $0.151 to $0.155. But if this breakout snowballs, which often happens after prolonged consolidation, the next fib-based targets stack up fast. 17 cents, 19 cents, even 21 cents if momentum sustains. And the best part? Most of the market still doesn't care. While everyone's chasing hype rotations or waiting for another Bitcoin ETF headline, XLM just flipped a major macro structure, with rising RSI, bullish divergence, and on-chain signals lining up in the background. This is the moment when smart capital starts looking for entry. Not when the crowd is shouting, XLM to the moon. But now, while it still feels uncertain, while the breakout is fresh, and while it hasn't become obvious. Because once it does become obvious, it's already up 50%. Let's break down the technical setup next, because this isn't just about a trend line, it's about how price, volume, and momentum are finally speaking the same language for the first time in nearly a year. The technical setup, breakout validation. Let's get into the structure that just flipped everything. This wasn't some random pump or low-volume wick that tricks retail into chasing a breakout. This was a structurally clean reversal, backed by volume, tested support, and confirmation signals that technical traders wait months to see. First, the descending resistance line from the August 2024 high had been a persistent cap. Multiple lower highs, October, December, March, all got rejected at that trend line. Price kept compressing beneath it, forming what looked like a never-ending bearish channel. It wasn't just a short-term trend, it was the entire narrative. XLM is dead, they said, until it wasn't. What changed? For starters, the breakout wasn't isolated, it was part of a pattern reversal, the inverse head and shoulders we mentioned earlier. This isn't just a casual pattern traders throw around. When confirmed, it often marks a psychological shift in the market, from fear and disbelief to accumulation and breakout. The left shoulder formed in late January when XLM bounced off 10 cents during a broader altcoin relief rally. Nothing crazy, just a temporary bounce. Then came the head in mid-March with a capitulation low around $0.085. While altcoins dumped, Bitcoin consolidated, and sentiment fell off a cliff. But that bottom didn't crack. Buyers stepped in. Smart money started accumulating in silence. No hype, no headlines. Then came the right shoulder in April. A higher low, a stair-step pattern, and volume started climbing, subtly at first, but enough for keen-eyed traders to notice. Now here's the key, the neckline. That $0.118 to 12 cents region had acted as both historical resistance and a psychological lid for months. Every time XLM got close, it got smacked back down. But this time, the breakout candle closed above it on above-average volume, which is exactly what you want to see in a real reversal. Not only that, but price has now come back to retest the neckline as support, and it held. That's the breakout validation right there. Fakeouts collapse on retests. Real breakouts find by pressure on the retest and continue up. That's what we're seeing now. RSI is in bullish territory, MACD is flipping positive, and the Bollinger Bands have widened, suggesting increased volatility after a long squeeze. Now let's talk targets. Measured move projections based on the inverse HNS pattern suggest a first target around 15 cents, the height of the pattern added to the breakout point. But that's just the start. The next horizontal resistance zone sits between 16 cents and 17 cents, where XLM previously consolidated back in Q2 2024. Above that, you're looking at psychological levels, $0.2025 and beyond. But technicals don't operate in a vacuum. The best breakouts are the ones that align with narrative and fundamentals. And this time, the chart isn't the only thing that's waking up. There are real ecosystem signals, institutional movement, and rising stablecoin flows that could give this chart serious fuel. And that's what we'll cover next, because if price action is the engine, the fundamentals are the fuel. And right now, Stellar's tank might be fuller than anyone expected. Real-world fuel, institutional catalysts behind the pump. Let's cut through the noise. This XLM breakout isn't just about traders buying a dip. It's being powered by actual fundamentals that the market is just starting to wake up to. These aren't speculative moves based on FOMO or hype. We're talking about serious institutional catalysts that are setting the stage for long-term growth. Catalyst number 1, Palago Labs and real-world trade finance. You've probably heard the name by now, Palago Labs. If you haven't, you're missing out on one of the most powerful use cases that could drive Stellar's price to new heights. Palago isn't just another blockchain startup in a crowded field. They are one of the first platforms building institutional-grade trade finance tools using Stellar's Sorbonne smart contracts. And this isn't some theoretical experiment in a developer sandbox. Palago is already operating in the real world, specifically in Asia, where import and export businesses are tapping into the power of blockchain for trade finance. They are tokenizing invoices, automating settlement processes, and creating cross-border liquidity rails. Think about this. Businesses that traditionally wait up to 45 days to get paid are now accessing near-instant payments, with minimal fees. This is a huge problem that affects trillions of dollars in global trade. And Stellar's technology is solving it, quietly but powerfully. That's the kind of real-world utility that gives XLM its legs. It's not just about speculative hype. It's about institutional-grade solutions that make cross-border payments seamless, reduce friction, and slash transaction costs. As traditional finance firms start to realize they can tokenize their assets and settle payments with near-zero fees and instant finality, Stellar will become the go-to solution in the $10 trillion trade finance market. This isn't pie-in-the-sky optimism. It's economics at work. Catalyst number 2. Stellar dominating in tokenized assets. Here's a stat that should have the entire crypto community on edge, but for some reason, no one's talking about it. According to Coinmetrics, Stellar is now the third largest blockchain for tokenized real-world assets, RWAs, only behind Ethereum and ZK Sync. Let that sink in. Stellar is ahead of the curve, surpassing platforms like Avalanche, Solana, and even Polygon when it comes to tokenizing real-world assets. This is no small feat, and it's all thanks to Stellar's unique value proposition. Its compliance-first design, built-in asset issuance tools, and native stablecoin support. Stellar is tailor-made for tokenizing everything from real-world assets like real estate and commodities to invoices and dollars themselves. The result? More tokenized assets are flowing through Stellar than almost any other chain. This is a market that's only going to grow, and Stellar is positioning itself as a foundational player. This isn't some side project. It's a massive, underrated trend that's quietly gaining steam while others sleep on it. Don't expect this story to stay under the radar for long. Catalyst number 3. Soroban's mainnet is live. And then there's the big one, Soroban. Stellar's smart contract platform just launched its mainnet, and this is where things get really interesting. Unlike Ethereum, where gas fees are unpredictable and have the potential to drive developers crazy, or Solana, which has dealt with constant outages, Soroban is built from the ground up to be different, and it's already starting to prove itself. Here's why Soroban matters. Flat, low fees. Forget about gas fees that fluctuate like crazy. Soroban's predictable, low-cost fee structure is going to be a game-changer for developers who need stability. Built-in KYC hooks. For regulated apps, compliance isn't just a buzzword. It's a requirement. Soroban's design includes native KYC/AML hooks, allowing it to cater directly to institutions and enterprises without the constant regulatory headaches. Rust-based contracts. Security and performance aren't optional in the institutional world. They're critical. Soroban uses Rust, a programming language known for its security and speed. This makes it much more appealing to serious, large-scale developers. Designed for institutions, Soroban isn't just a platform for DeFi projects and random tokens. It's designed with the needs of institutions and enterprise developers in mind. Think Palago, Beans App, Token.io. These are just the first wave of builders creating real-world solutions, not just yield farms. Now that Soroban's mainnet is live and already being used, it's only a matter of time before the broader market wakes up to the fact that Stellar's smart contract platform is ready for prime time, and it's got the chops to take on Ethereum and Solana. So no, this breakout wasn't some random blip on the radar. It's the market finally waking up to what Stellar has been building quietly and consistently during the bear market. And guess what? The smart money has already realized it. They're loading up, and they're getting ready for the next big wave of institutional adoption. This isn't a pump fueled by speculation. It's a fundamentally driven surge that's built on real-world use cases, institutional-grade technology, and an ecosystem that's ready to scale. And if you haven't already noticed, the market's about to catch on. Big time. What smart money and traders are betting on next. Let's talk about the next move, because this breakout isn't the end. It's the beginning of a new phase for XLM. Here's what smart traders are watching. On-chain signals. Let's talk data. The numbers don't lie, and right now, the signals coming from the blockchain are all pointing toward one thing: whale accumulation. Over the past 30 days, according to data from Messari and Stellar Expert, whale wallets have increased their XLM holdings by a staggering 12%. That's a huge shift, and it's a signal you shouldn't ignore. When the whales start stacking, you can bet they know something the average retail trader doesn't. And it's not just whales making moves. The on-chain volume for tokenized assets is currently at a 14-month high. This is massive. It tells us that real-world assets are flooding into the Stellar network, and institutional players are clearly starting to take notice. These aren't just theoretical tokens. They represent actual business transactions that are being tokenized and settled on Stellar, fueling the infrastructure that's driving XLM's value. And then there's the all-important exchange outflows, and right now they're spiking. XLM is moving off exchanges and into private wallets. If you're not familiar with this metric, here's the quick rundown. When assets leave exchanges, it's often a sign of accumulation. Traders are taking their XLM off exchanges, either to hold long-term or to use in real-world applications. This is classic smart money behavior. They're not in it for the short-term pump. They're positioning for something bigger. Technical targets. Let's get into the charts because price action is where things start to get interesting. Right now, immediate resistance for XLM is sitting between $0.13714. If we manage to flip that, the door opens wide to the 18 to 21 cents range. And if the momentum holds, that's not just a hopeful projection. It's probable. But here's where it gets even more compelling. Fibonacci extensions from the Head & Shoulders breakout are pointing to a 19 cents target in the short term and a midterm target of 26 cents. This is a key indicator that many traders rely on, and it suggests that if the breakout continues, we could see a significant rally. Now, let's talk about the MACD, a key momentum indicator. The MACD just flipped bullish on the 3-day chart. This is not a common occurrence, and historically, these types of crossovers often signal the start of a rally in the 20% to 40% range. When the MACD flips like this, it typically means the market is transitioning from a period of consolidation into a bullish trend. So, if history repeats itself, we could see XLM push even higher in the coming weeks. Sentiment analysis. So where's the buzz? This is the part where things get interesting, and it's a bit of a hidden gem. Despite XLM's recent price surge, the sentiment around it is still relatively low. Twitter mentions for XLM are still under the radar. That's key because this move hasn't gone mainstream yet. Most retail traders haven't even started to pay attention to Stellar's performance. And that means there's huge potential for the next phase of the rally to blow past expectations. What's more telling? Google Trends for Stellar XLM have just started to spike. This is the earliest indicator of retail interest, and we're just beginning to see people start to Google it more frequently. That's a strong signal that awareness is building, slowly but surely. On top of that, institutional crypto newsletters, the likes of Galaxy and Delphi Digital, are starting to mention Stellar again. This is significant. These publications don't waste their time on fleeting trends. When they start giving XLM a second look, you know something is brewing under the surface. It's been months since Stellar made its way into those reports. So the fact that it's back on their radar is a clear signal that institutional interest is picking up once again. What does all this translate to? The smart money is already positioning itself, while the retail crowd is still asleep. When retail finally catches on, when everyone else is still focused on Solana and Ethereum, XLM could already be up 40 to 50%. That's how these market cycles work. The real gains come when the majority of people are still distracted by other coins, and the real opportunity is right under their noses. So, is this breakout sustainable? Here's the big question. Is this breakout sustainable? To answer that, let's break it down. What would kill this momentum and what could send it into overdrive? For the momentum to stall, a few things could derail it. Sudden regulatory crackdowns. If regulators come down hard on Stellar or the broader crypto market, it could cause panic selling, especially among retail investors. But, as we've seen with Palago Labs and Stellar's compliance-first design, the platform is built to withstand regulatory pressures better than many others. Market-wide correction. A broad market correction could take down XLM along with the rest of the market. However, considering how much institutional money is starting to flow into XLM, a price dip could present a buying opportunity for those who are paying attention. What could send it into overdrive? Increased institutional adoption. More businesses and financial institutions integrating XLM into their operations would provide the catalyst for a massive uptick in demand. We're already seeing the early stages of this through Palago Labs and the growth of tokenized assets on Stellar. A major partnership. Stellar landing a huge, global partnership with a major financial institution or multinational corporation would be a game-changer. If XLM becomes a go-to solution for cross-border payments or trade finance, the price could see a significant, sustained increase. Retail FOMO kicks in. While retail interest is still relatively low, once the trend gains steam, we could see a FOMO-driven rally. This could result in a quick 20 to 30% spike as mainstream investors flood into the market. So, in summary, this breakout has legs. The data, the technicals, and the sentiment are all aligning in favor of a sustained upward trend. But what's really exciting is that the big moves are just getting started. Keep your eyes on XLM. The smart money is already making their moves, and it's only a matter of time before the rest of the market catches up. What's next for XLM? Bull triggers versus bear risks. Let's keep it 100. Not every breakout is the real deal. Some may look promising at first, only to fade into oblivion. So, with XLM's current surge in full swing, the million-dollar question is, what's next? Where should you be looking, and more importantly, what should you be avoiding? Let's break down both sides, the bull triggers that could take XLM to the moon, and the bear risks that could halt this rally dead in its tracks. Downside risks. Before you start getting too comfortable with the idea of XLM skyrocketing, remember that no market is without risk. Macro headwinds are one of the biggest potential threats. We've seen it time and time again. When Bitcoin retraces hard, it takes the whole market down with it, including XLM. The two assets are still highly correlated, and a deep Bitcoin pullback would likely trigger a similar sell-off in Stellar. So, if you're holding XLM with rose-colored glasses, don't ignore the broader market conditions. If Bitcoin heads south, expect XLM to follow. Next up, resistance at 14 cents. If XLM can't break through this level and stays stuck below it, the breakout could lose momentum. Even worse, if it drops below $0.118, then we're looking at a complete rejection of the breakout. That's the danger zone. If this happens, the breakout will quickly lose steam, and the market sentiment could shift back into the bear's favor. At that point, expect people to start questioning if XLM can sustain its upward trajectory at all. Then there's Soroban adoption. This is crucial. Soroban isn't just a cool concept. It's the backbone of Stellar's push into the enterprise world. If development activity around Soroban stalls or doesn't gain traction, it's going to be tough to sustain higher prices. Fundamental growth has to keep pace with the market excitement. Without continuous innovation and adoption, XLM's value proposition starts to lose its luster. The real-world narrative, that's what's keeping the XLM bull train rolling. Without it, the whole ecosystem risks stagnating. But even with these risks looming, here's why the upside outweighs the downside right now. Bullish continuation triggers. Let's talk about why XLM might just be getting started. The market is full of signs that point toward bullish continuation, and the next few weeks will be crucial for confirming this breakout as the real deal. The first trigger? Sustained volume over the next 5 to 7 trading days. This is key. A lot of breakouts fail because they have a strong initial spike but no follow-through. If XLM can maintain consistent volume during this time, it's a clear signal that this isn't just a one-off pop, but the start of a real trend. Volume is the lifeblood of any market movement, and if it stays strong, you can bet this breakout will continue gaining traction. Next up, new Soroban app announcements. We've seen how much excitement can build around new enterprise-grade applications. If we see Palago Labs report impressive usage metrics, or if another major app launches on Soroban, it would send a powerful message to the market that XLM is not only surviving but thriving in real-world use cases. This would fuel the narrative that Stellar's blockchain isn't just some speculative investment. It's a genuine tool for solving enterprise problems, and that's what's attracting institutional interest. Another massive trigger? Exchange listings or stablecoin ramps. If we see XLM get listed on more exchanges, especially large ones like Binance or Coinbase, or if we see further integrations with major companies like MoneyGram, that's going to spark a huge boost in accessibility and liquidity for the token. XLM has already started ramping up through platforms like Uphold and MoneyGram, but there's room for much more. Every time XLM is added to a new wallet or exchange, it's like opening up a whole new window of opportunity for new buyers to enter the market. The more integration we see, the more the market begins to see XLM as a legitimate asset. And finally, the most important bullish trigger, break above 14 cents. This is the key price level. If XLM can clear 14 cents and hold above it with strong volume, we'll see a major breakout to the upside. Think of it like a dam holding back a flood. Once it breaks, it's game on. If XLM sustains momentum above 14 cents, we could see the floodgates open, with price targets quickly pushing toward the 18 to 21 cents range and beyond. The bottom line. Here's the thing, this isn't a run-of-the-mill breakout. There are fundamental and technical factors at play here that make it worth paying attention to. The risks are definitely there, but they're not as significant as the bull triggers that could send XLM into a new bull cycle. Keep an eye on the key price levels. Look out for major app and exchange announcements, and watch for Soroban adoption to continue building steam. If all those things line up, you can expect XLM to go parabolic. And when it does, you don't want to be the one looking at it from the sidelines. XLM just flipped the script. Here's the play. For months, Stellar was on the sidelines, written off by most of the market. No flash, no influencers hyping it, no viral memes claiming 100x returns, just slow, painful price declines and a lot of silence. XLM was the asset everyone forgot about, drifting beneath the radar while others stole the spotlight. But now, the story's flipped completely. XLM has broken out of its long-term downtrend and confirmed a classic bullish reversal pattern. The charts don't lie, and the market is waking up to a whole new reality. Stellar is now getting support from real, institutional use cases, specifically in trade finance and tokenized assets, areas that have the potential to create massive long-term value. This isn't just speculative excitement. It's real-world utility driving XLM's rise. And here's the kicker. This is all happening before retail investors even start to notice. The big moves are being made now while the masses are still on the sidelines. If you've been waiting for a solid signal to get involved, this is it. But let's be clear. Breakouts don't reward those who are reactive. They reward the prepared. If you're trading, accumulating, or simply watching, this is a moment that matters. You have to be ahead of the curve if you want to capitalize on what's coming next. The market is shifting, and those who understand the fundamentals are the ones who will benefit. If you want more breakdowns like this, no fluff, just raw crypto insight, hit that subscribe button and stay ahead of the noise. This is Be Crypto Smart. And we don't chase the hype. We decode what's actually happening.